Good morning, good morning, good morning, good morning, everyone. Welcome, 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 and thank you for joining us for our webinar today. As you know, my name is Lesala Khetheng, and I'm the training manager here at EBL Institute. I'm also the business development manager at ActionCOACH Thabo Pitse, or ActionCOACH TP for short. Where you know you're here, the reason you're here is because here at ActionCOACH and EBL, we help entrepreneurs like you build commercial enterprises, not only commercial, but profitable. That work so that you as an entrepreneur, you as a business owner don't have to. What we call a finished franchise. I think at this time, at this point, you know exactly that slogan and you know exactly what it means. And I'm hoping that you're getting value month after month. And if this is the first time that you're joining us today, you're in for a treat. We have a great program set up and you're going to learn quite a lot. So make sure you have your pen and paper ready. Make sure you're seated in a quiet environment, no disturbances. Maybe it's in a loud environment. Make sure you have your headsets in and make sure that you don't have any distractions or anybody who's going to get you out of here. Today, we're dealing with a topic. We're dealing with finances and how to master your finances. And at the end of the day, that's the bottom line of creating a business, to make money. And today, that's exactly what we're looking at. So as you know, we have great prices in store for you today for participation and for engagement. So we invite you to engage with us. Use the control panel. There are two options that you'll find there. There's a chat box. This chat box, we recommend that you use comments. We call them BFOs, blinding flashes of the obvious. These are those aha moments when you say, this is important. I need to write this down. I need to remember this. Or I just remembered this. Oh, yes, I know this. Or, you know, all those moments when you're saying, aha, write them in the comment section. If there's something that you want to share with us, put it in the chat box. But if you have a question, we're going to have a Q&A session at the end of the session. So please make sure there's a Q&A option on the control panel at the bottom of your Zoom screen. Click on that and write in your questions in there. The speakers will deal with them at the end of this webinar, and we'll make sure that, so write in all those questions that you have, and we'll make sure they get addressed today. So as you know, every business needs a clear game plan of exactly how you're going to make money. And that's what we're dealing with today. So please feel free to engage with us. And just to remind you about the prizes, we have our main prize today is 1,000 Rand cash. This is going to the person who's going to contribute or who's going to engage and participate the most. And then for those of you who are joining us from YouTube, we have 500 Rand MTN data that's allocated for the person who participates the most, who engages the most. And also today, we're giving out the book. So we're dealing with finances. So it's only makes sense that we hand out a finance book. So this is the book that we're giving out today, the Finance Handbook by Precious Mbulani. If you are the winner of this book and it happens that maybe you've won it before, we can still give you a voucher so that you can get another finance book. So there's definitely something in for each and every one of you who will be engaging with us today. Now, without further ado, let me introduce you to our speaker today, our host. As you know him, he's the rock star of entrepreneurship. He's the CEO of EBL Institute, the chairman of Sage Africa. He's the president of the Free State Chamber of Commerce and Industry. He's a #1 ranked action coach, and he's held that spot since last year. Each and every month, he's been #1 in Africa and is ranking among the top 100 coaches in the world under Action Coach. So you're in great hands today and you're in for a treat. Let me introduce you and let me welcome, please help me welcome our rock star for today, the Action Coach, Coach TP. Welcome, sir.
Mr. Cool. Thank you very much. Yeah, good morning, everyone. And thank you very much, Estelle. Normally, with that kind of energy, Mr. Cool, you'll be expecting a nice applause from the audience. So yeah, I think that went well. Thank you very much, Estelle, for that. First of all, I must say, guys, I don't know. Something has been missing in my week in, week out. I'm thinking, oh my, something is missing here. And it's been you guys, actually. I've been missing you, I must say, So nice to actually see you. Yes, I know I see your names, but each and every one, I see your name, I see your face, I see all those moments we had, whether it was around the table when we play leverage game, whether it was when we were eating, whether it was Tanda busy complimenting me on my six-pack. Thank you very much. All of you guys, even on the webinar here, Reino, I know for sure. When you think, you think Reino, you see Dr. James Forte, everyone, Gift, all you guys, welcome. Oh, and to our guests, those will be our clients of ActionCOACH, our entrepreneurs who are going through our program here with the University of the Free State and EBL Institute. So with that being said, we welcome you all to this family, and I'm very happy to be here today. I must say I missed you guys. Now, first of all, let's start with what we are here for. Remember, we obviously have gone through a session where we spoke about generating income. And then when we sat and we were playing the leverage game, I remember a whole lot of you guys, you demonstrated exactly how you've taken the knowledge. Others, it was a refresher. Others, it was there were a lot of aha moments. And then you went back and said, okay, so this information you're giving us is working. And then you went on and you started doing better. And congratulations, week in, week out. We see you guys, what you're doing. Business is expanding, getting more contracts, getting more clients. So congratulations to you guys. Just a quick two things that I just need to say is that, first of all the female entrepreneurs right now who are in here, if you have been through EBL Institute in the past or right now, and even those coming, let me tell you the good news is that you stand a chance as you are sitting there to win a six-figure growth capital, and you are going to go through those who are going to win that. We're going to give you that cash injection. You'll go through another training one-on-one with me as your coach. This is not a proposal, guys. This is not something that we are thinking about. The money is there inside. It's just waiting for us to start. So unfortunately for now, only the female entrepreneurs. But it's fortunate because these are the people who got it, who know it. Whatever the system has done in the past to shut you out, those days are gone. This is your time to shine. So I just want to tell you that as a female entrepreneur, we are not done with you. There is still more coming for you guys. And just remember, soon, I can't wait. You are having not a graduation day, guys, a graduation week. You're gonna have fun. You're gonna wake up at 4 a.m. and exercise. We're gonna go to sleep at 11 a.m. carrying some of you to your rooms because you have drank so much oros from the bar where we will be. All those kind of stuff. So we are gonna have some fun. Last but not least, another announcement I just want to say is that next month, the webinar, those who are coming, if you want to be part of the last session that we are having with VT, you need to attend the next month webinar. Only the people who will attend will be able to be let in. Otherwise, others will sit streaming. You can't even ask questions. You can't even do that. But remember, our entrepreneurs who are part of EBL Institute, for you, just remember, you will be in the room with VT himself. He's in Dubai now. You can't wait. He's only going to come back for that, by the way. He's coming back for you guys. Can you believe it? So, yeah. So I'll be joining him in a few weeks, and then we'll come back and see you guys. So with that being said, let's start today. Now that we are going to talk about, remember we've spoken about money, we've been making money, but here is an issue here. You are making money, but now you need to grow this money. You need to get more money into your business. The banks, they don't want to fund you. Other institutions don't, but why? The main reason that we've seen is that a lot of you guys, you actually don't know how to go about it. That's why I have brought the person that we have brought in today to come and actually make sure I help you. After all this is said and done, you know exactly how to go to people who have money to give you money so you can put it into a good use. All right. So once you know this, you know how to generate money. And then once you know that, the combination of the two, there's absolutely no way you will not know, because you just need to know the rules. So this is why we are here today. We have done the generation of money, which we will quickly recap. And then after that, what are you going to do now? You need more money as your resource. The topic today is money. That's why my coach's corner, I think to everyone who is on the call, if I may ask the team in the background, if we have maybe the link to the coach's corner that I wrote about, how to win with money, how to go about the rules that you should know in order to get funded. You just want to walk into the bank and get that 10 million that you want, that 5 million, whatever it is, 100 million. You just want to walk into the bank and do that. Please, you may please put a link so that everyone can read, because I think I've covered the subject, so I don't need to do much. But guys, let's just quickly, for those guys who are in here, maybe for the first time, or if you've forgotten, let me just quickly take you through to what we have done here with our clients. Okay, sorry. Let me just quickly go back. Let's just quickly recap. Do you still remember how to actually generate this cash flow so that we get to the point where we are going? I think this part we have covered. And those who have forgotten, as a business owner, remember, there are three things that you need. You need these customers, which is in red, to give you revenue, and then that's the business money, but you want profit out of it. That's why you're in business, right? That's for yourself. But now, before you get customers, just remember the 5 variables that you need to understand and to master. You need to master your number of leads, which is your marketing, your conversion rate, which is your sales. Only then you can get customers. So now if you say my business does not have money, or I don't have money, meaning that your business does not have what? If you go back, revenue. Why doesn't it have revenue? You cannot have revenue without customers, isn't it? So just remember that you need to master your marketing, which is your leads. You need to master your conversion rate, your sales, you get your customers. After that, these customers come in and out, they come and buy, right, in your business. So you need to check for you to get your revenue, it will depend on the number of transactions. Do they buy just one product? How many times do they come? The frequency, and then the average sale as well, of the goods that you are selling. Okay, that's why your pricing is very important here. Because if you don't have enough money, but you've got enough customers, remember, what do you look at? Do you look at why do you have money, but why do you have customers but not enough money? If you go back, the number of transactions that they are making, maybe one, and you've got 10 products. Why don't you then upsell and get them, upsell, cross-sell, whatever, get them, increase the number of transactions so you can increase the number of your revenue? Why don't you increase your price? So all those, just remember right now, that's exactly how it works. And then once you have your revenue, don't chow it. You don't eat it. You then, what happens is that you need to have your profit margins for you to get your profits. Okay, so now this we know, this we understand, and then the next thing, I'm not going to go through this. I think we've been through this. You guys understand exactly how it works. So if you see this formula for the first time, you'll know exactly, those are the numbers, conversions, everything. So you've got your customers, revenue, and profits. So what do you do with this money? Now, this is something that everything works with rules. That's why we've got a speaker today as well to tell you the rules of how to go and ask money from other people for yourself or for your business. My 3 rules of money, remember, it's simple. What happens? You create, you preserve the money, and then you invest it, right? So while I'm busy saying this, the question now is that what is the end game of your business? Why are you building that business? Okay, which is the last question I'll give you before I introduce our speaker now. Remember, this money that you are generating, before anything, you need to preserve it. And let me just remind you, it's very interesting that you make money, preserve it, and then you're a business owner, you drive your R or GTI, or you drive your, which cars are notorious. I don't want to talk about BM. It's decent people who drive the car. So, like your Mercedes-Benz. Anyways, so now, but you don't have a medical aid. Why? How are you preserving your health? How are you preserving that business? Through insurances and all that. That's how you preserve your money. And then investing it is where you're going to grow it. But sometimes, for you to invest, it doesn't even come from creation or generation. You will need other investors, or you may need to go raise money somewhere. That's why we are having the session that we are having. All right. Now, let me introduce to you our speaker for today, who will actually share with you the rules on how to go about this. But before I do, can I just ask you something? Can you type on the chat box? Type on the chat box. Last time I asked, what is your relationship with money? Majority of the comments, we had to contact the hospitals to actually help you, because you guys were really, you spoke about the abuse that the money is giving you. You spoke about all the things that were literally negative. So where we stand right now, what is your relationship with money? What has it improved? Are you guys in a romantic relationship now? Do you understand each other? Do you respect each other? Do you respect money? Money respects you. Is it a growing relationship? Is it a fixed mindset, or is it a growing mindset? Now that you've got a different information, now that money is such a good, important resource in your life. That's why even in churches we pay tithes. You pay money as a tithe. It shows how important it is, despite your religious belief and stuff. So what is your relationship with money? Has it improved? Okay, so while we are talking, I don't know what level of money relationship or what stage of mjolo with your money you are at right now, but wherever it is, I hope it has improved, because when you have that positive relationship and you're sending this positivity towards one another, there is definitely some magic that will happen out of that. Okay, now, ladies and gentlemen, who know how to generate money, who know how to preserve this money and invest it, now you need more money. You know, you've got a business idea, not idea, you've got a business that needs to grow and it needs money to grow. And you need to go to other people to get money. How do you go about it? Now, the person who is here, who is coming today to share this with us, you know, out of everyone that we asked, I'm very proud of this speaker today, or I guess presenter today, from the business called Success Tuned. I remember this business. Once upon a time, one of the years in EBL, we had this lady as our student. And when she came with this business, you know, we're talking about accounting, we're talking about your tax, we're talking about many things, raising funds, understanding how money works and stuff. And ladies and gentlemen, I'm very proud of her. And the main reason why I am, this is one of our graduates, alumni of EBL Institute. And today she's coming in here as an industry expert to actually come and share with you guys. And one of the best things about it, in business, making business work, branches, Free State, Khetheng, you know, with partners, big players in the game here. She knows the game, and that's why we've chosen her today to come and actually share with you. And one of those ladies, young ladies, we're proud of, you know, to be in business today and to, you know, to actually show you guys the ropes, you know, and share the ropes and help others and stuff. Without much further ado, ladies and gentlemen, I proudly introduce you here to our alumni, Dikonelo Mile. Dikonelo, welcome. How are you feeling this morning?
Good morning, Dr. Pitse and the wonderful, amazing entrepreneurs that are with us today. I'm feeling great, and I'm hearing you this morning talk about the relationship, you know, that we have with money. So I think for me, I think if you were to ask me my relationship with money, I would say it's where the money resides. It just needs to reside, you know, and yeah, so I'm excited for today.
Yeah, you know what? I think with what you just said right now, I'm gonna love and leave you. And yeah, I will see you later then. Over to you, Dikonelo. Thank you very much once more for coming.
Thank you, Dr. Pitse. Morning, entrepreneurs. I'm hoping you're having a wonderful Tuesday. As Dr. Pitse has already said, my name is Dikonelo Mile. I'm the Managing Director of Success Tuned. So what we do, we deal with accounting, tax, and business advisory for small and medium businesses. I'm a business accountant. I have, you know, background in banking. So that's normally what I do on a day-to-day business, on a day-to-day. And I'm very, very passionate about entrepreneurship. You know, my story, my personal story is I grew up, you know, with a father. He used to have taxis, you know, he was in the logistic, and I used to see him struggle a lot, you know, with, you know, SARS especially. And I remember being a little girl telling myself, like, I don't want anybody to go through that. So I see, you know, that passion has since grown with me. I'm very passionate that any space, any client that I come across, I assist them for their businesses to be sustainable, because I think sustainability is the name of the game. You need to be in business because you want to be in it for the long run. You want to make money, you want to build wealth, you want to make a difference in the community that you're in. And, you know, finances normally are a reflection of that. So as Dr. Pitse has already said, you need to look at the relationship that you have with money, because even as an entrepreneur, normally that affects how you deal with the money that you have in the business. Because remember, the business is led by the entrepreneur. So that's actually quite an important point that you know, he made this morning. So entrepreneurs, just give me a few seconds to share with me my screen so that we can just start the presentation. I'll be able to answer your questions at the end. And then I'm just going to share with you how I've structured this presentation and what I'm going to go through. All right. So as I've already done an introduction, today I'll be doing a financial guide for small and medium enterprises, businesses of tomorrow. I'll be covering, you know, topics like the innovative entrepreneur, what's your compliance checklist, what does it look like, your business finances, your business taxes, is your business fundable, what is your succession plan, And so that's what I'll be going through. And I'll tell you why. So when I structured this presentation, I structured it around a lot of the pain points that a normal entrepreneur goes through on a day-to-day basis. So one of them being that as an entrepreneur in a pandemic, you need to be innovative. So a lot of the businesses that will exist tomorrow, hence my topic, businesses of tomorrow, is those that are led by entrepreneurs that are willing to be innovative. So as an accountant, as a banker, I've seen a lot of people with great ideas. However, because of the pandemic, because of the fast-paced moving world, they have failed to innovate, and therefore I've seen great ideas, die because of that. So why innovation? Innovation, because you have got to start with the end in mind. You need to look at how does your business look in 3 to 5 years? Is the business that you're building, is it going to be scalable? Are you going to be able to replicate whatever it is that you're doing? Why innovation? Innovation because where you need to look at where is the world going 5 years, 10 years from now. For instance, I'll make an example. We're already seeing the world move into electric cars, and if you're going to go into that industry of motors or energy, you need to be looking, should I, or is it safe to invest in opening a petrol station or filling station? If I invest all this capital, how long will that sustain me? So you need to look at where is the world going to be in 5 to 10 years from now? And is your business going to address and solve the problems that the world will have then? Because if you look at then that's when you're talking sustainability, that's when you're talking growth, that's when you're talking scalability. You need to also take into consideration that, we are in a pandemic. For instance, if you are a client or you want to go into the restaurant business, and you have your money set up, you have your business plan ready, and you come to me and you say, you ask for advice. The first thing I'm going to ask is, how innovative is your business? Because we've seen a lot of businesses get affected by the pandemic, especially in South Africa. It's only now that they are recovering. It's only now that they found new ways of operating, new ways of delivering, new ways of doing things, so that the restaurant businesses continue. So innovation is basically new methods, new ideas, new products or services. The product or the service that you have, are you going to have new methods of doing it? Are you going to have a new idea? And are you going to have a new invention? We've seen that with the world's billionaires, your Jeffs, your Elon Musks, they've already introduced the idea to humanity of going to space. So they've thought ahead of the game. So as an entrepreneur, you take that and you bring it home to yourself to say, where is the world going? Am I going to be able to solve those problems? Because at the end of the day, we can talk business plan, we can talk statement of cash flow, but business is this. It's being able to solve a problem or a pain point and making sure that you are filling the demand. So even if there is a problem, if it's not solved or the problem does not have a demand, you are not in business. So as Dr. Pitse has already said, you need to make sure you're working your leads, you're working your contracts. Is there a demand where you are going? Are you solving a problem? What is that problem that you're solving? So for example, I'll make an example with what happened in the pandemic. We've since had to develop new processes of working from home. Big corporations have now introduced the policies, company policies of working from home, either in a hybrid way where you go to the office when you want to, when you have to, and then the rest of the time you're working from home. Or some offices have actually started policies of working from home forever. You know, it's a policy ongoing. And a lot of that changes have come up with, you know, changes, have come up with migration. People are moving to certain cities. So those are some of the things that you need to look at as an entrepreneur to say, where are the people going? Where am I going to locate my business and stuff like that? You know, companies have had to cut costs because of the pandemic. Everything is online. Every business needs to be online. We're now having virtual summit. I'm also happy to say I've cut down my flight costs at times, even though, you know, connecting with human beings is key, but I've definitely cut down my flight costs because not all meetings where I have to fly and meet a client pitch and all those, all of that can be done online now. So you need to look at what new methods, what new ideas, what new processes will you be applying in your business to be innovative? So in order to win in the game, before we even talk about finances, are you a business of tomorrow? Are you an innovative entrepreneur? And then, so based on that, then I would say it's safe to talk about the money. So entrepreneurs, I'm gonna start talking about the compliance checklist, right? So every year as an entrepreneur, whether you have an accountant, you have a team, you have a lawyer, you have anything, the responsibility lies with you to make sure that your business is compliant, especially as a small business owner. So I'll make an example. I've onboarded a number of clients that are suffering from SARS now. They'll tell you like, okay, I have penalties of 30,000 Rand, and that's, at times quite material. When I asked, what is the issue? Well, for the past 7 years, I thought my accountant has been filing, and it turns out the accountant did not, or I did not submit my annual returns with the, CIPC, and now my company is deregistered, and I had this big project, and I can't qualify. So as an entrepreneur, as a business holder, just make sure either you delegate that to your team or you yourself take the responsibility to make sure that your business is compliant. So I'll just go through the generic, this obviously a deep dive into all of these things where you look and you check that your business is compliant. So for every business, there'll be generic compliance if you are based in South Africa, and it's the same if you go to other countries. Those countries have their way of dealing with things when you are a company operating in those spaces. But if you're in South Africa, there's generic compliance, and then there's industry-specific compliance. For instance, if you're a client, I know a lot of our engineering clients have to comply with the, CIDB, where they have to, get their gradings and make sure before they get contracts and stuff like that. So that would be an example of an industry-specific compliance. Then you have generic compliance, where all businesses that operate in South Africa have to qualify for. The first is if you're registering with the CIPC, you have to be compliant with the Companies Act of South Africa. So that's a lengthy one, but you just have to make sure that you're a director, you don't do any fraudulent stuff or anything, you're just not on the bad side of the law, you don't get sequestrated or listed anyway. So that's just compliance when it comes to Companies Act of South Africa. And then common mistake that a lot of business owners do is, when you register your business, you register it with the CIPC. They forget to submit their annual returns. So every year, they will send you a reminder to say, submit your annual returns with CIPC. So like I already said, you get a lot of businesses that they didn't do this for 4 years, and then they've been operating, but they didn't submit for 4 years in a row these annual CIPC returns. And then CIPC decided, oh, well, we are going to start the AR, annual return deregistration, because eventually if you don't do that, they deregister your company. So I've had clients that had to, miss out on big contracts because they thought they are in business. And when they go and, the third party does third-party checks, they say, but this business does not even exist. So just make sure that you submit that. The second one is tax clearance. SARS, do not get into trouble with SARS. Just make sure that you're always tax cleared, because for any project, even if you're dealing with business with government, you have to make sure that you're always tax cleared. Investors need that when you're applying for certain types of funding, they need to make sure that your business is tax cleared. So those are some of the things that you need to check. If you have employees, you have to make sure that you pay stuff like your COIDers, your UIF, unemployment insurance fund, your pay as you earn. If you have trademarks, you need to make sure that the trademarks are up to date. Otherwise, somebody just takes over your ideas, your patents and your copyrights. And we've seen a lot of articles, especially in the arts industry, where people are fighting over copyrights and royalties and stuff like that. So those are the things that you need to look into to say, am I still compliant? Did I pay my trademarks and stuff like that? Insurance is not really a compliance, but in some cases, you need to be insured as a business. Make sure that your insurances are up to date. Review any clauses that are changing. And also, if you are in certain industries, like for instance, if you're a lawyer, your legal counsel is going to need that you have financial statements that are audited. For some, they need to be either reviewed or audited. They have to be compulsory audited. You need to check your credit scores. Is your credit score still okay? Any licenses that you need to have, for instance, as an accountant, I need to be in good standing, with all the accounting professional bodies every year in order to be able to operate. I need to make sure that my certificates are up to date. So that could be the same as well. So obviously these things, them with time whilst you're operating, whilst you're working with people in your industry, but it's just really, really important. There is no point for me to be, as an accountant, to even talk to you about financial statement if your business is not compliant. So that's very, very, very key, because a lot of people have had to walk away from big money because, the businesses that they have are not compliant. All right, so the next part, I will talk about business finances, right? So business finances, I'll be going through the annual financial statements that you have to compile in your business. So I always say, the role of accountants, the role of auditors, tax practitioners is to educate and support business owners. One of my motivation is to say, there is no way we can have so many accountants in this country and that are very knowledgeable about how a business finance model should work. However, we also still do have stats where they say within the first 5 years, small businesses die. So either the relationship between these two professionals and entrepreneurs is a bit, something is wrong. And, that's the message that I'm always preaching, to say, you cannot have all these accountants that have all this knowledge, and then you have all these businesses that are failing. So either the accountant is not doing what they need to do, or the business owner is not doing what they need to do, or there is no relationship at all. So if you are in a state where you can afford an auditor, a tax practitioner, a financial wealth coach, a financial planner, make sure that you invest. So when you look at your budget, if you see these professionals as a cost, then you are in the wrong place, because they are an investment of some sort. They need to be your eyes and ears from the outside. They need to see all the red flags. They need to show you what's happening on your statements that's costing you all the sleepless nights and the trouble. So that's what I always say, to say the cost of accountants, auditors, tax practitioners, coaches, that is not actually a cost, it's an investment that you're putting into your business. So if you can afford one, please do get one. Then annual financial statements are all about measurement, right? So that's all it is. So I always try to explain this in a way where entrepreneurs understand. So I cut out all the jargon so that you understand it in a way where even a grade 5 child would understand it. So all that financial statements do is present measurement, because what you cannot measure, you cannot achieve. So if you cannot measure, is this big, is this big, is this small, you are not going to achieve it. That's why record keeping is very key. I cannot stress the importance of how many clients I get or we get on a day-to-day basis that do not record. They do not record their receipts. They do not record their revenue, and I understand as an entrepreneur, you get too busy being in the business, being and making it work. However, it is very key if you want to be in the game in the long run. You need to make sure that you have your record keeping. And it's not all the time where, we're saying the accountant is there, but if you are responsible, if you're a sole proprietor, make sure that your records are up to date. Find time during the weekend, after hours, where you record. Because even fairly big businesses, some of them fail to do record keeping. So for instance, someone will come and say, I have a big project of 10 million. I haven't been doing my books since 2018. And then they can't even submit financial statements. There's no way you can do that in a week. You'll have to pull quite extreme measures. So I'll start with the income statement, or the statement of comprehensive income with the latest language. The key measure of that is the revenue. How much are you making? How much is your business making? And then it's the cost. And then it's the income tax. How much are you going to owe SARS? What if I walk in and I'm an investor, or I have interest in your business, at any given point when I ask you what is your highest cost, you're supposed to know what it is. Is it rental? Is it salaries? Is it electricity? What is your highest cost? And why do you have that cost? Is it something that you can avoid? Is it a cost that you can avoid? Is it a cost that you can, shuffle around and, make sure that it works? What is your best-selling product or service? Because the income statement will indicate, although, that falls on the side of management accounting. However, the income statement will show you what are your best-selling products or services. What is your costing structure? Dr. Pitse spoke earlier that you could have all these clients, but if you're not costing correctly, you might be in trouble in terms of meeting your obligations or, even breaking even. So the income statements, that's all it does in a simple day-to-day explanation. The key measures is revenue, your costs, income tax. You need to look at what is your highest cost? Why do you have that cost? What are you going to do about it? Is it avoidable or unavoidable? It shows you your revenue, how much money you're making. Based on that, you're able to dive down into your best-selling products and your costing structures. Then we come to the statement of financial position. The statement of financial position, 3 key things is assets, liabilities, and equity. Assets, it's basically what the business owns. So what the business owns either is able to assist the business to make more money. We're talking ownership when you talk assets. It's called assets because you own it and it's going to help the business to make more money, to realize more revenue in the future. So whatever you use it for is going to bring returns back into the business. Liabilities is basically financing that you needed or money that you needed, that you borrowed, so that you can, make sure that the business continues to operate. There's a lot of, different types of, liabilities that you could have. If you're owing SARS, that's automatically a liability. You have current, and then you have long-term liabilities. Equity, on the other hand, is the ownership structure that the business has. So you'll find items such as accumulated losses or retained earnings. So it's basically like what Dr. Pitse has said earlier on, to say, if you make money in your business, do you go buy, the Range Rover Sports, or do you reinvest the money? So that's also reflected in the retained earnings, to say, did we reinvest all the profits over time, and how much is the share price of this company? So those are, some of the things the measures that the financial position statement does. So what I always say is that every business should aspire to have cash generating line items under the assets. And I'll share this just when I'm on the financial position screen, because you get businesses that are good with their cash flow, but they don't have reserves. Like literally, with the recent looting that happened, you had businesses that were fairly operating well, but they were looted, and the insurance companies did not pay, but they never saved any money for the business. They never had reserves, but everything else was fine. So now come this unexpected, disaster, there are no reserves. The business does not have cash generating items under, the assets. Then we come to the statement of cash flow. The measurement here is cash is king. I honestly cannot emphasize how important it is to have cash flow in your business, because even if you have an award-winning business, and when I say award-winning business, I mean at the level of Silicon Valley, if that business does not have cash flow, it's probably not going to be a sustainable business. So cash is key, right? What is happening in your bank account? What is happening with your reserves? Do you have money when you have to pay suppliers? We're talking liquidity. Do you receive money when you should and on time? This one, we know, is a topic that's it makes a lot of, people in the industry angry, whereby they've had to shut businesses because they did not receive money when they had to. And these are people that had great ideas, great, businesses, but because they couldn't receive money from customers in time, then that businesses had to shut down. And then also to say, when it comes to cash flow, for instance, when you receive funding, so you receive funding from an investor or a business loan, what do you do with the cash? A lot of entrepreneurs work so hard to get funding, right? They get funding, they go and do business plans, run after the banks, go to those investors, motivate their case and their business plan. Then the money is there, good thing, but they don't know what are they going to do with the money. Like, they literally don't know. So the money is there. You get businesses that just, in 4 months, that money is gone and it never returned anything. So you might as well not even gotten that funding in the first place, because, if it's not gonna, push the business, then it's pointless. So that is what the statement of cash flow does. Cash is king. Do you have the money to pay for operations, to pay suppliers when it is due? Do you receive money in time when you need to receive it, so that you can make sure that you pay all your obligations in time? And where do you get the money? What do you do with it? If you get funding, are you going to buy assets? Are you going to pay salaries with it? If the bank gives you a loan, what are you going to do with the money? Are you going to the financing that you get, or if people invest in your business, what are you actually going to do with the money? What is the structure that you have in place? So I will just also touch on the other type of statement that I've seen, in presentations. It doesn't really get the attention that it does, but it's the statement of changes in equity. So this one will give you your shareholder, what is going on. Do you pay yourself dividends as a business? How much are your retained earnings? Do you reinvest in the business? So that's basically what the statement of changes in equity does. But this one, the emphasis is a lot of small business owners do not have shareholders agreement. I've had to, come in between family fights, uncle invested, but there was no agreement, and all of those type of things. Now, as the accountant, I have to come and, rescue on behalf of the business, obviously, where people did not have shareholders agreement. If you're a silent or an angel investor, it's understandable, but everything should be on paper. If you say you have 1,000 shares in your business, who do they belong to? How much are they worth? What's your equity structure? Do you finance the business through, selling a stake in the business, or do you finance the business through, getting a loan? What is the ratio between those two? So those are some of the things that you need to look at. And just, a word of advice for entrepreneurs: you need to have a finance policy that you review regularly. So this is now outside of the actual set of financial statements. You need to have a policy that you document to say, this is the person that withdraws, this is who's accountable for approving transactions, this is our petty cash policy, we reviewed monthly, this is who's allowing and authorizing transactions. You have 2 people doing that. If you are a sole proprietor, at what point do you use the business cards and all of that? So you need to have a finance policy as an entrepreneur where you review it regularly and you make sure it adapts to the changes of the business. You also need to make sure that your company has reserves. A lot of companies, like I've already made an example, do not have reserves. They don't even have a fixed deposit with the bank, but the money is coming in. And then when there's this one small little thing, and the company now has to borrow money, you didn't have to borrow money if you in the first place would have had reserves. So those are some of the things. And then also, just when it comes to business finances, you need to also always look, when do you outsource and then when do you internally generate functions? For instance, like I said, if you can manage doing your books as a small business that's starting out, to do that. But there's going to be a time where you need to outsource. If you need to get an accountant, you get an accountant. If you need to get an HR person, you get an HR person to do all of those things for you. And then the most important thing when it comes to also business finances is your costing. Costing is so important. You need to know, where have you placed yourself in the market? What LSMs are you covering? Who's your niche? What's your target market, and how can you price? Because a lot of businesses as well have had a big time where they either overcharge and the clients do not see the value in that, or they undercharged because they just they just sucked the quotation. Like, I feel like I'm gonna charge them 2,000 today. You need to have a valid data as to how do you cost your products, why do you cost them that way, and obviously that's backed up by a lot of research. And some of the examples of the systems that you can use for business finances is mainly cloud accounting. So we're talking cloud accounting. Gone are the days where you still use Excel, and then if your computer crashes, you don't know what to do, papers are flying all over. Cloud accounting is the way to go. You have affordable packages, and some of these softwares that are being used are Zero Accounting, QuickBooks, Zoho. You have Sage, you have Pastel, and you have Wave. And the nice thing about this is that you can get your data real time. So let's say you're on a flight, you get off a flight, you get that call that says, quickly send us your management reports, we want to fund you. You just go online with your phone. You don't even have to use a laptop. You retrieve the data and then it goes through. So that's part of innovation, some of the innovative things that you need to look at as an entrepreneur, especially if you are a sole proprietor, because obviously if you have a full set of team, then your team will be the ones that are accountable. But if you're still a sole proprietor, look into cloud accounting. You just log in, just like you log into social media. All you do is log in, your data is there. You see if your sales are falling behind, if you are in the losses, in the income, or if you are in they all normally have a dashboard that shows you, are you breaking even, or where is your business, and you can always literally access that real time. So I'm just sharing the statement, a sample of the statement of financial position, how it looks. So what I normally say to entrepreneurs is, a statement needs to be also a source of motivation. Go and look at, maybe a public company, depending on your goals. Go and look at your public companies or your competitors' financial statements that are obviously public. Look at the stuff that they had, or they have, the line items that they have on their financial statements, and see if you can put that as part of your milestones. The financial statement is also a guideline. So what I normally do with my clients is I give them an empty skeleton, and I say, you need to decide like which areas are you working on in this financial year. So for instance, cash, inventory, if you are in the inventory, if you are, not in the service, you'll have inventory. Those are day-to-day things. However, for instance, you can have assets as a business. The business can have, what I always tell business owners is that when you go in the legal terms, when you meet lawyers, they'll tell you that a business is a juristic person. The key word being person. So meaning it's not a human being, but it's a person. You need to think on behalf of your business the way the juristic person would think. Meaning, if in a personal scale, like Dr. Pitse said, the relationship that you have with money on a personal scale, your business also has to have a relationship that it has with money. Meaning, If you identify in your budget that I think I need a second source of income or a third source of income, that's the same exact thing with your business. So I've seen people that only operate within the space where the business does. So if I'm offering financial services or accounting services, that's the only income or the only asset, the only thing that I focus on. But your business is allowed to have sources of income. Your business is allowed to own property. Just like you would want to own property, your business is allowed to do that. Your business is allowed to have shares in other companies, just like you would want to have shares in other companies. So allow your business the flexibility to also be a juristic person, to have assets of its own, just like in a personal capacity, you would want to do that. So yeah, that's what, the skeleton of the financial statement position. I always say, look at it, look at what you want to own, how are these assets going to help. Liabilities, make sure that there's a balance, there's a policy. At what point is too much debt? At what point are you willing to sell the stake in your company? If I come as an investor, how much are you going to give me the stake or the equity? What is it in return for? Long-term liabilities, short-term liabilities, how are you going to pay those back? Are you reinvesting? What is your share price? What is the value of your shares in your company? So that's basically what the statement of financial position does. The statement of comprehensive, like I said, you have the revenue line item, you have other income. Like I said, you are allowed as a business to have other income. Your only income, you don't limit yourself to saying my only income is the services that I offer. You are allowed to buy a stake in company X, and then every month they give you a certain amount of money. So you are allowed to have other income. It represents your revenue, and then all your operating costs and other costs. And when you look into your obligations, like your interest, if you have loans, then you also look at the tax, because that's an obligation that you're going to have. So that's why you have profit before tax, and then you take those the interest obligations and the taxes after. And then that's why you have profit for the year. That profit for the year, then you look, if you have shares, is it attributable to the businesses that the parent company, if you are in a bit of a complex structure, or what is the profit for the year and who is it attributable to? And then we will look at the statement of cash flow. This one is the nightmare for a lot of businesses, but I'm hoping that all entrepreneurs that are here are people that are, talking sustainability. So the main three things are, there's cash flow from operating activities. That's obviously the day-to-day, which I emphasized, which is cash that you pay to your suppliers, cash that you pay for salaries, and cash that you receive from customers, operating expenses that you have to pay on a regular basis. If you did invest as a company in other things other than your main line of services or product, you might get interest that you get into the business. Let's say you have with a bank, you have an investment with a bank as a business, then they give you interest. Those are some of the things that affect operating cash flows. If you have to pay interest, that is a cash outflow. If you have to pay taxes, that's a cash outflow. So then you have dividends. If you cut yourself, you don't take a salary, or you pay yourself a certain amount of dividend every year, depending on your dividend policy, you also need to have that. Then this will be money that gets out of the business. Then you have cash from investing activities. Investing activities basically is like the assets that you, like, what are you investing in as the business? And these things that you're investing in, do they bring money back to you or to the business? So for instance, if you have to buy equipment, that will be a cash outflow that falls under investing activities. If you sold some of the equipment, the money that comes back, that will be stuff like proceeds that you got into the business for as a result of that. And if you had to replace some of the equipment that you have, machineries that you have, those are some of the investing activities that you would have under the cash flow. Then you get cash flows from financing activities. Financing means how do you get money that you are going to use in your business, the capital that you are going to use. So perhaps you sell me a stake, then I give you 1 million for that, and then it's money into the business, but it will fall under financing because I basically financed your business to carry on operating. If you have to pay a loan, that will be cash outflows that fall under financing activities. If, as shareholders, we are contributing towards the equity, we have an arrangement to contribute towards the equity of the business, those will be proceeds, from, as a result of having a stake in that company. So all of these the main trick is to make sure that when the money is needed, it's there. And then when the money should be received, it's received. Because even if you have this nice tech idea that Elon Musk would listen to, if you're not able to receive the money when it's received, or pay when you need to pay, it's just, you need to make sure that you are constantly balancing the cash flow. Even how you collect money from your clients, the contracts, the type of contracts that you have with your clients, how do you collect money? Do they have penalties for late payments? Do they understand the necessity and the need for paying on time? So those are the things that affect day-to-day businesses, whereby you have this great model. However, the money is not there when it's needed. And for instance, you could have, practical structures whereby, let's say you get a lump sum and then you reinvest it into a short-term reinvestment where you get, interest. Maybe if you trust somebody, you can be like, I'm going to invest in this, then they're going to give you money back with interest. That interest could be also a good idea, that the money that you get, you can put it into short-term deposits, and when you need it, you are able to get it back, because then the cash must not just sit there. You mustn't have a lot of cash sitting around waiting. You get people where they put money the whole year for SARS obligation, but they're struggling. So find a way where you say, okay, I know that SARS is going to need money in February. I have 4 months before I can pay that. I'm going to use this cash in the meantime to, put it here and there, and then when it's due, then I can get that money back. And I'm hoping, I'll cover some of the questions, regarding that edge. Then we're going to talk about business taxes. I saw in the chats, one of the entrepreneurs says they hope that we are going to share ways in which they can dodge SARS. Well, you cannot really dodge SARS. I think they are actually one of the most effective departments that we have in the country. So the goal is to be best friends with SARS, right? Just be best friends, don't be on their bad side, just be best friends with SARS, the South African Revenue Services. You have business taxes versus personal taxes. A lot of entrepreneurs confuse, when do they have to pay their personal taxes, or they neglect their personal taxes because they're too busy submitting the business ones. So you need to see yourself as someone, as an entrepreneur, you have to handle your personal taxes, then you have to handle your business taxes. Personal income tax is due 28 February annually for every personal individual in the country that has to pay tax. So it's the same, you can't change it. And then business tax, however, is due at the end of the financial year, your financial year. So it's important to choose a financial year end where your business is off peak. I've seen businesses that put their financial year there because someone in the past just registered and said 28 February, but you get that 28 February is the busiest time. You cannot be worrying about submissions and wrapping up transactions when it's, when your business is on peak. So you sort of need to look at what are the peak times of your business, right? Then I'm just going to explain briefly the types of income taxes. You have income tax, where if you're a company, you pay 28% of the taxable income if you qualify as a company. So just remember that the taxable income is your total sales or revenue minus all the business costs, and then whatever is left is what the taxable income. So if you qualify as a company, you will pay 28% of that. However, I think the target markets that we have today is, income tax for small business corporation, or what SARS calls SBC. So what the government then did is they came up with SBC tax, or income tax for small business corporation. It's still income tax. However, they're trying to encourage trade and entrepreneurship, the economy, to make sure small businesses are able to participate. So this one, you have a tax based on a sliding scale. The tax is based on a sliding scale, and I've shared it here. You'll see if you're between R1 and 87,300 Rand if you're between that for the taxable, not the gross, the taxable income. If it's between that and 87,300, you don't pay any tax. So SARS will not say you owe us. However, if your taxable income is between 87,301 to 365, you pay 7% of the taxable income that's above the minimum of 87. So, that's how basically they calculate. So the criteria to be, a tax, to be a small business corporation, is that your business, or the legality of your business, must be a juristic person. So if you are a company registered with CIPC, closed corporation, even though they are discontinued, you will be a juristic person. All shareholders must be natural persons. So you cannot have a shareholder that's another business. So all shareholders must be natural persons. Your gross income must be below 20 million per annum. And then if you do have investment income, it must be less than 20% of your gross income in a year. So you cannot be making, for interest sake, you cannot be making 1 million worth of income and then 300,000 comes from, I don't know, Bitcoin that you have in the business. So you need to have 20% of the gross income not coming from investment income. Then other types of taxes that you have provisional tax. So this is, if, provisional tax is if you, it's for, if you earn income other than a salary, SARS will say you are liable to to pay provisional tax. Then it's paid in the year that it incurs. So if it happened this year, you pay this year. Unlike with personal income tax, you wait for the year to end. You wait for 28 February, and then only after you pay after your submissions. So provisional tax, when it happens now, you pay now. So it's due in August and it's due in February. And just word of advice, a lot of businesses have not been submitting, whether they are on zero or what, and then they've got penalties, especially this year. They've gotten a lot of unnecessary penalties because they never declared their provisional tax, if they did have or if they did not have. So that's something to look into. Then you have value-added tax. Value-added tax is charged at 15% of standard rated goods. And I need to emphasize, so value-added tax is not the money for business owners. It's not your money. It belongs to the government automatically by virtue of being in South Africa or being covered by the Tax Act. So a lot of people trade and then they think, okay, I can work things around. You are just the middleman between services and SARS when it comes to VAT. And that's why SARS is not lenient when it comes to this type of tax. If you have to pay VAT, please do it, because you will get a lot of penalties when it comes to that. So the business is a conduct for SARS only. You are just the middleman. When it comes to VAT, if you get your invoices being charged 15% and you're also charging 15%, just pay it over. Don't even see it as a cost saving mechanism or anything like that. So registration are voluntary until you are making 1 million of turnover. After that, it's compulsory. But before that, it's voluntary for whatever reason that you need. But if it is voluntary, if you're under the voluntary, you need a minimum of 50 million turnover that you can prove that you did make a minimum of 50,000 Rand. So that is the VAT that you're gonna pay, or that SARS is gonna owe you, is based on the VAT of what you're selling, the products or the service that you're offering, minus the VAT of what you're buying to create that sale. So the difference between that will indicate if that is due to you or if you're supposed to pay SARS VAT. You have different types of rules. When it comes to that, you have what you call zero-rated goods. Then the VAT on that is 0%, which is your bread, basic vegetables, milk, basic goods. Say, those are basic day-to-day, so there's no VAT on that. Then you get exempt supplies like financial services. On those, they are exempted, meaning if you're offering that, there is no VAT charged on those types of supplies. The VAT is due every 2 months, depending on the category that you fall under. You need to make sure of that. And then the payment is being done on the last day of the month. The rule is earlier of invoice or receipt. So I've seen people argue but the money is not yet paid. It's not yet in the account. So whichever one is earliest between the invoice and the receipt, that is what SARS is going to base their case on. So if you now have an invoice that you issued and the person did not pay you, and then you have to submit your submissions, that VAT in SARS eyes is already due. So yes, so that's that based on the VAT. Then we have payee, which is pay as you earn. This one will affect you if it's compulsory if you employ a person and they earn 83,100 per annum or 6,935 per month. So if you have employees that have earned that much, you have to pay as you earn. And the employer, as a business owner, it is your responsibility to withhold this type of tax. So don't also, you see, when it comes to VAT and payee, SARS is not lenient because these are monies that do not belong to you. They are not yours. You can't even work around strategies. You must just not even see that money. Just take it there, because it's money that belongs to the government. So this one is due every month on the 7th, following the month of the payroll. So like now, if we are in October, the payroll for September has already ran through. That means you should have already paid by the 7th to avoid any penalties, right? So just ending, when it comes to business taxes, I'm going to talk about tax evasion versus tax avoidance. And I know someone in the audience did ask, like, how do we avoid, or how do we work around? How do we, it's not, there's a legal way to dodge and there's the illegal way to dodge SARS. So you have tax evasion versus tax avoidance. Tax evasion is the illegal evasion of tax. So you made money, you didn't declare it, you found ways, you just don't hope that they get you, because we've seen articles day to day where SARS is very good, they're very good. They know how to find. So that's tax evasion, where it's illegal. You should have declared, but you didn't declare. But I will say that sometimes entrepreneurs were not aware. Unfortunately, they were not even, it was not a malicious case where it was an intent to miss, but they were just not aware. So it's always important to educate yourself as to what should I be paying? If I have employees, what is due? If I take dividends, what do I need to declare, not declare? So that's tax evasion. Tax avoidance is the legal use of tax laws to reduce your tax obligation. So you are using whatever the Tax Act says, you're using it so that you can reduce. If you're going to pay 50,000, you'll find a way that you pay 20,000. And this is where it gets interesting. Just a word of advice, you must always make a provision for the tax due. So you get people that enjoy cutting themselves salaries the whole year, the business is doing well. Come 28 February, SARS is like, you owe us 70,000. There's no 70,000. The entrepreneur doesn't have 70,000. That has caused a lot of problems for businesses. So work your projections, your budgets, your financial statements, your provisions, and check, okay, based on where we are now, chances are come February or come financial year and I have to declare this much tax. And then that money, you keep it somewhere, making sure that you always balance your cash flows as well, so that when it's due, it is there. You don't have to go make a loan so that you pay SARS, because now you're working backwards, because a loan always comes with interest. So we've had people where they had to go borrow money because SARS is chasing them. And then now the interest is also like another unnecessary cost. So those are some of the things that you need to look at. You need to look at ways to save costs. As an entrepreneur, are you going to cut yourself a salary versus are you going to take dividends? Maybe you take it once a year and then find a personal way to, distribute the money annually. If you have two businesses, are they both going to pay you salaries, or the other one is going to give you dividend, the other one, stuff like that. Those are ways where you can play around, legal ways where you can play around to make sure that you don't pay a lot of money towards SARS. Those that happen in a personal case, you can donate to a retirement fund. You can have a retirement fund because there's a certain allowance that they have. We've all heard, or tax-free investment. If you invest into a tax-free investment, it means the interest, whatever interest that you get out of that investment is tax-free. It will not be counted as an income. That interest is going to be exempted under your taxable income. Then the capped amount that you can pay towards that is 36,000 per annum and 500,000 per lifetime. So yeah, for instance, if you donate to a SARS registered public, PBO charity, NGOs, you do have NGOs where you can, during the year say, I'm funding you laptops or this and that. If they do have a Section 18A certificate, that receipt, you can use it when you do your, when you do your submission. Sorry, I see that Lesala has raised his hand. Okay, yes, all right. So I'm about to wrap up. I see that I'm running against time. So let me I think the most important is to just talk about business funding, and then I think we would have reached the end of our presentation, and I'm sure you'll be able to go through this as well. I'm just giving you a banker's perspective when it comes to, when you need funding. So when you go to a bank, the most important thing is a business plan. A business plan is always a synopsis of your business, especially if you don't have a track record, financial history. What the banks look for is, your credit score, the personal credit score of directors as per the CIPC are being assessed for the business risk profile. Does your business have regular cash deposit into it, especially if you are a seasonal or a project-based business? The risk profile would, they look at stuff like risk ratios, the type of industry that you're in, credit scores, your financial statements, the cash flow of your business. What are some of those types of, what does your financial statements basically say? And then just the top 5 things, if you go to Silicon Valley and you're looking for an investor, the top 5 things that, they're looking for is, the 5 C's: confidence in your business, commitment, do you have creativity, do you have clarity, stuff like that. So just make sure you're always positioning yourself in a way where if you reach out to an investor, you've positioned yourself correctly for some of these things. And then lastly, it's the succession plan. The succession plan is what happens, what next? So you've started your business, what next? Always make sure that you have a shareholders agreement. Do you have a will in place? Is your business insured? What is the end goal that you have in mind? Did you start your business because you're going to sell it? Are you going to make it a franchise? Are you going to list the business as public? Is it going to be a family business, a global brand? So it's always important to have a succession plan as a business owner because it will assist in the way that you operate. All right, so I think we've come to the end of our presentation. We'll be able to, cover the Q&A. So I will hand over to you, to Dr. Pitse, so that we can just look at the Q&A.
Right. Sorry about that. Busy having a party here. First of all, Dikonelo, I must say, your presentation truly speaking, very holistic. Each and every point that you've covered is exactly what entrepreneurs should know. So for that, I just want to say thank you very much. Honestly, I think you have, this is the best part about when entrepreneurs themselves, they say one of the failures that we are seeing is that people who are not entrepreneurs make decisions for entrepreneurs. So right now, you're not just a financial guru, but you're an entrepreneur as well. That is why I think from your presentation, you know exactly what entrepreneurs need. And I'm sitting there and I'm looking like, what is missing in this presentation? And honestly, I could find nothing missing. So with that being said, what an awesome presentation. Thank you so much. And again, I'll keep saying, I'm so proud that you're a product of EBL here. So I think others see exactly what kind of superstars that we produce for the world out there. So with that being said, you know what I've done is that, okay, there are a few questions that I'd like us to actually address. I think when it comes to UIF, okay, I've seen that one has been addressed. There's an important question here. I think something that is trending a lot nowadays is the guys, who are doing the trading, cryptocurrencies and stuff. And I see Dr. Forten is asking there, what is the latest in terms of SARS where cryptocurrency is concerned?
Yes. So when it comes to cryptocurrency, and I think we've seen a lot of articles where SARS has had a hard time classifying things as to how to account for it. So what SARS does is they assess the reason why you have cryptocurrency. So if like meaning is that you have money out, they treat it as a form of trade. But if you have it long term, then they treat it as an asset, whereby if you then now sell your Bitcoins, it will count as, the type of tax that you will account for is, capital gains tax, whereas versus, they check the cost. What is the cost? Why are you in Bitcoin? How often? Because we've gotten a lot of entrepreneurs, not entrepreneurs, people, where they're getting money, they're making money, they don't even declare it because obviously there were no structures in place. However, SARS is now checking as to, do you have, those investments are offshore? What is the use? What is the intent? So if it's for long-term use, then it will be considered as an asset. If you sell your Bitcoins, then they will count as, under capital, because it's an asset that you're selling. However, if they then do discover, then they take it as a form of trade.
Okay. All right. Oh, there you back. All right. No, thank you very much for that. Now, I see a lot of questions, people asking for templates, people asking for recording and stuff. What does that mean, right? So can you tell us, so what is your consultation cost fee? So that some of the questions here, a lot of people, I would literally direct them to say, just contact Dikonelo, book for your consultation. So what is the investment? What do you charge? What's your consultation fee?
So when it comes, yes, so the consultation fee is 650 per hour. That's when we can do the initial assessment to say, okay, where are you, where is your business? What is the goal of, the consultation, or what deliverable are you trying to achieve? Then based on that, we can look at, cost-effective ways to come up. If you need to be on a package with us, then that's what we look into.
All right. Now, thank you very much for that. Like I said, there are a lot of questions, but here's the thing. From my side, I think here's my sentiment, and this is what I've learned. And I think I've learned from, great teachers, great businessmen, for me to be the great businessman that I am. And now I'm talking to every attendee here. So normally what happens in the beginning of the year, I will call my accountant, tax practitioner, what I call my financial power team. We sit down. I will tell them exactly, okay, this year, here's my predicted income that is coming in. Here are my goals and everything. And then how do we go about it? So we literally write the rules. And I think this is very important. We write the rules in terms of how are you going to go this. You know exactly how much you're talking about important things that you spoke about. In terms of that, I know. So you can sort of forecast exactly how much liability you'll have with SARS and what should go there and stuff. So you don't just wake up every morning, and wonder what you are owing and stuff. So we literally plan in advance. With that being said, and this is where, you've got Dikonelo on the call. The tip I'm giving you here think that's the right person. You should literally even sit down, plan this. You can plan your year, you know. Now, while doing that, there is something you mentioned that is very important here. You know, when you are playing the game at a certain level, there are things that come in there that not just maybe a normal entrepreneur would know, normal people would know. Let's just upgrade our people here. We spoke about VAT. Now, VAT, obviously, that's such money that you need to declare. But now, is there a way that you can actually, one, write off VAT, and number two, use VAT as some sort of a saving? I know you did say it, but I know it's a very controversial point, but you know what I'm talking about. So can we maybe, you know, that advanced financial skills where VAT is concerned, how can you write off VAT?
Well, you have things like where you can write off VAT on, you know, bad debts, and you know, there's ways. I think there's a lot of ways we can, you know, find a way. You know, you'll have to definitely sit down and see what is applicable. But you know, you can have VAT that you write off when it comes to bad debts that are in the company. There's a lot of ways. You just need to sit down and just find a way that is legal, you know, within SARS to see what are the loopholes.
Okay. All right. Just still on that question. Okay. Now, in terms of voluntarily registering for VAT, right? And then you can prove, obviously, you've got 50,000 as per criteria. Now, the question is, could you tell us what are the main reasons? Why would somebody want to register for VAT? Yet they are not, you know, at that VAT bracket, if I have to put it that way. What are those benefits that you're actually looking for you to voluntarily register for VAT?
Sometimes it's because if you're dealing with big suppliers, they opt not to work with you if you're not registered for VAT, because it's also something that they need from their side. So you need to check who are your suppliers, who you do business with. So you don't have to wait until you are at 1 million. But if you are below, and then your suppliers are people that need, VAT registration. So those are some of the things that you can consider to register prior to the time.
All right. You know what? I must say honestly, suppliers basically. So even okay. Other reasons, I'm not going even to go in there because this is your session, but I think you've given, I think that's the key word that our entrepreneurs need to know. So thank you so much. Like I said, if you're a student, I would give you like, that's 11 out of 10 right there. You know, reason why entrepreneurs should do that. So thank you so much. You know, here's the thing now, guys, to attendees here, we can go through each and every question, but I can tell you right now, I think when it comes to finances, and I'm very glad that you actually went through, SARS mostly, which is, I think, the dangerous part of the finances that you have. With that being said, do you agree with me that we don't need to answer each and every question that is in here? Each and every entrepreneur, you need to have an accountant. You need to do, this needs to be part of your planning. You can't go through the year where you think you'll just go in and ask for statements. You can just respond to SARS when they threaten you. This needs to be a plan. This needs to be part of your operational plan of your business. Am I right or am I right, Dikonelo?
Absolutely. So I have emphasized, I have people with great ideas that could go global, but because of those habits, they've stopped them from, going, far. So those are some of the things that entrepreneurs need to do early. Plan ahead, plan your salaries ahead, everything in business, plan it ahead so that, you don't react to the circumstances. So make sure that you always know how much are you going to pay, how much are you going to owe. Don't waste your penalty. Alone, I have a client that owes 30,000 Rand of penalties. And they are a small business owner, by the way. It's not like they are in the millions. It's not a material amount. So that's money wasted down the line. It could have been reinvested for other things, but because they were waiting to get a threat, that's a big issue at the moment.
Oh, no, thank you very much. I think just the last thing maybe that I should actually say, because I remember when you said it, you spoke about, you remember, and this is when I talk about my money rules, it falls under preservation or how you preserve your money. You spoke about insurance. And now this is, when you talk about cultural, what do you call it, matters or problems, there's this culture that we have, an African culture. Should I call it a South African black culture? You buy an expensive car, you don't insure it. Get into an accident, the car is gone, and you're sitting with a liability of millions. Look what happened with the looting. So I heard you mention the business that, insurance, but I was sitting there and I thought, Dikonelo, did you have to be that software that is concerned? Now, can we have this as the last point, where business insurance is concerned, having been shown practically with the business that are looted, those businesses that were able to come back because of insurances? I know I've got a good friend of mine, what's her name, Margaret from Heshes. Their business literally in less than 2 weeks, they were able to come back. They got millions paid from insurance. So now can we please, this is part of the culture. How on earth do you keep assets and do not insure them? So can you maybe be a bit harsh on that one? Business insurance, I think that is one thing which I think it needs cultural, is it mindset thinking there over there. Is business insurance an expense or is it an investment? I mean, how do you actually, how do I put this? How do you make sure that these guys understand the importance of insuring your business or your assets whatsoever?
Absolutely. So the rule is what you cannot afford to lose, you insure. So if what you cannot afford to lose, you insure. But if you can afford to lose it, then don't insure it. If you have machines and you wake up, you come back, they were stolen. If you have the money to buy them, then don't insure them. That's what I always tell entrepreneurs. With that one statement alone, you find that you have to insure the things that you cannot afford to lose. And there's a saying that if you can't pay for it twice, you probably don't afford it. So if your business cannot buy the machinery twice, you probably should insure it. So that's quite important. You cannot work on hope when it comes to business. You do not work on hope because you don't know. Business by its nature is a risky place. So you need to always make sure that if you cannot afford to lose it, make sure that you account for the premium or the cost. But that cost is also, it counts as an investment. It's you pay to play. So if you want to play big, you're going to have to pay some money for that.
Wow. You know what? On that point, I am certain these guys want more of you. But like I said, your details are there. My team as well, please share the details. And I'm saying to you, you don't need to, if you don't have an accountant, if you don't have a financial plan, if you don't have these templates, you don't just need to ask for those simple things. If you don't have that proper plan, there's your girl, there's somebody you can talk to. So please contact Dikonelo, let her help you. Even if it's just to help you with the assessment, you'll see exactly what happens later and stuff. But please talk to her, contact her. You had an investment of 650 per hour. I think it is not even that much. So I think you should be charging more than that. So guys, please get in touch with Dikonelo. So from my side, really, Dikonelo, like I said, few things. One, extremely proud of you. Two, thank you so much for being the person that you are. Thank you so much for being a space where you can actually help entrepreneurs, not just making money. You are helping them the right way, which is something that I'm actually very proud of. And that's why my recommendation of you highly, And then more than that, on behalf of our institutions, the University of the Free State, ActionCOACH, our global brand, EBL Institute, my team, all our entrepreneurs that have attended here, we say thank you so much. We will send you our gift. And maybe hopefully these guys could be lucky, they could see you. We have a graduation week, not a graduation day. Nowadays, EBL Institute, how we do things. So who knows, maybe if they are lucky, they might see you there's one of our distinguished guests. So with that being said, from my side, thank you so much. This was awesome. Thank you once more. And I'm going to hand back to Ms. Nicole. But before I do that, to our entrepreneurs, guys, thank you once more for attending. Remember, where finances are concerned, I keep saying this and I've said it, You need to know your numbers. That's number one. But very important, when you know your numbers, when you are trading, you need to write the rules of trading. They say you pay to play. I mean, she said it herself. You need to know these rules. Insurance, what you cannot afford to lose, you need to insure. So you need to write the rules of each and everything, that whether it's finances, whether it's HR, you need to understand the rules of playing this game. That is how top players play. That's how people will get on top. You need to know the rules. So from this session, you have learned, you've got an idea. If you don't know the rules, please talk to Dikonelo by all means, or any other person you choose. But from this presentation, I think that's the best person to start, because she will actually guide you as to where to go to. With that being said, from my side, it was an honor and privilege to be with you this morning once more. Keep winning, guys. See you. Like I said, to entrepreneurs, I can't wait to see you. I think we're going there now towards the finishing line. And all the best with the tough work that you're busy doing in the university. Mr. Cool, back to you. Thank you so much, guys. We appreciate you. God bless you all. Bye-bye.
Thank you very much to you too, Dr. P. And thank you for always coming in month after month and hosting us. And I must say, you do a great and amazing job in getting the content out of our speakers. And today, the speaker that we had, Dikonelo, I think all of you can say and can you attest that you were definitely in for a treat today and you got a lot of value. And do please connect with us. We'll connect you with Dikonelo. She did also share her details also on the presentation. If you missed it, you can contact us. We can give it to you. And also, this session is recorded live on YouTube. So if there's anything that is of importance that you want to go back to, or maybe jot down those notes, or maybe, just to try and recap exactly what you learned today, please, by all means, go to our YouTube page, follow us on YouTube, follow us on Facebook, Instagram, and connect with us. Remember, we still have more speakers coming in for you. But without further ado, I know you guys are anxious. You want to know who's getting the prizes today. The first prize is the Finance Handbook by Precious Mvulani. According to the EBL team here, the winner of this book is Lwandile Mchamli. Congratulations, Lwandile. You are going away with this book, the Finance Handbook by Precious Mvulani. Congratulations, Lwandile. You know what to do. Make sure that you contact the EBL team so that this book can be couriered to you. The second prize that we have today is, as I share my screen, it is the data voucher, the MTN 500 Rand data voucher. And this one goes to Anna Lishokwa. Congratulations, Anna. You are getting the 500 Rand MTN voucher. Congratulations to you. A round of applause to you as well. And then the final prize, the one that you've all been waiting for, the 1,000 Rand check. This one goes to, as I share my screen, R1,000 MTN, or the 1,000 Rand voucher goes to Siamtanda Shobo. Congratulations, Siamtanda. You are getting 1,000 Rand cash. And as a reminder to everyone, please remember to communicate with us, send us through the communication, and so that we can, and exactly where you want us to send through your prize. And also, please send us a picture so that we can just share you on our social medias as well to congratulate you properly. We do also share your pictures on our weekly update. We share them with our network. So please also send us a WhatsApp on our numbers. They are on our website at www.eblinstitute.com. But also, if you're here, it means you've already connected with us before, and it means you can do so again. So once again, guys, thank you very much for coming in month after month. Next month, same time, we'll be here with another topic. Remember, this is an 8-month, 8 webinar series, 8-month, 8 topic series, where we bring you great speakers to help you as an entrepreneur build a commercial, profitable enterprise that works, so that you as an entrepreneur don't have to. So until the next time, thank you so much. Have an awesome day. Have a blessed one. And also, please do connect with us. Thank you.